Gold is on fire today, traders. How are you? So I was wondering what was taking the precious metals so long to wake up to lower yields lower again. Um, I talked about TLT, but anyway, let's stick with gold for now. I know I danced around the board pretty good. So we had this little pullback after last week's rally, and it held where it had to. Okay, it looks like a retracement. Now, if you just drew a horizontal line, let's keep it simple, against this resistance level right here, you see a rectangle. So, markets are geometry, traders. So I really believe that, all you have to do is master a few continuation reversal formations, things I teach like RSI, but, looks like breakout is a layup here over 1830. And just this formation has a width of a little over $30. So, 1860, 1870 looks viable. And in fact, GM coach, oh, hi, Daniel, how are you? Hello, everybody. So silver actually outperforming. Okay, so I wasn't as constructive silver. I thought we might get a third drive here, but gold's looking good, and it's being backed up by, I said that look for support in euro around 1840, 1850. That's exactly where it came in. And we're about to take out this high. I didn't believe that last Friday's low in the dollar was it. It seemed too pat, although I thought we might get up to 92.40 first. But now we're on our way to new lows. And now we'll see what happens at the 91.44 level. That was the original target, if you recall. I was looking at the daily where I had confluence on a lot of different areas right around the 91.40 level. So looks like we're headed there. That looks like that's going to be a battleground. We start taking that out. You could probably look at some fib retracements. 61.8 is 90.90. That would almost make sense. I'm still in the camp, as I said here, that we could have a correction in the dollar and still have another move to the upside. And I think that's what's setting up here. So there are going to be some decent shorting opportunities. I tend to believe that cable might be one of them, because I think we'll make a new high in euro. We're almost there, taking out last week's high in euro, where when you look at cable, we're still quite a bit shy of last week's high, almost there. But around 40.20, I think, is going to be an area to pay attention to cable. I think we still could put in some type of head and shoulders type of formation here. So looking at cable as a probable short, and we're do or die here in euro pound. Okay, stops under the low. We're not elected, held 85.03. This 85.60, this was a little deeper than I thought it was going to be, but I'll just keep the stop. I took partial profit, so really not much of a risk on the trade at all. Doesn't look great, but there are so many times, and listen to me, traders, stick with your plan. There are so many times where, short term I questioned, and I'm sure you have questioned your strategy, because perhaps it's not developing the way you thought it would, but there are many ways for things to get to a certain price. If you're look at Elliott waves, you'll see that all the alternate counts can lead to the same destination at times. So don't change your plan. Leave your stops where you planned on having them, and let the market decide what it's going to do. Okay, because say for example I pulled the trigger and got out right here because to me it looks like we have a chance of making a new low, and that's possible. And then we start trading over 85.60 in the next couple of days. So I know anyone who's been trading for a while has done that. There's an expression that I use, that just like real estate is location, 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 trading psychology, psychology, psychology. And the psychology in the end is yields continue to fall. It's heading towards targets that I talked about for a couple of weeks. Down here at the third drive target, there's another 60 pips, which should also be supportive of the metals here. So looking for the yen to test this low, probably gunning for stops here. And I think that's all going to tie in with this. If you recall, at the beginning of the week, I was talking about TLT making one more drive to a new high. I wasn't sure if it was going to be the employment data right now. ADP came in weaker than expected. We'll see what happens with NFP, but this scenario is manifesting and we're heading up to new highs, and it could turn out to be a very important short in the bond market. So we'll pay attention to that. Yields are testing recent lows. I thought this low would hold and we were just in a corrective pattern, but now here we are challenging these lows. It's going to be interesting on different time frames if we're going to diverge or not. When you look at this on a weekly basis, though, it still looks corrective, doesn't it? We had this huge move, and for it to be pulling back 50%, we'll see what happens. Now it looks like, maybe we'll go to 1.0, but I'm paying attention. I'm going to key my view in interest rates on this three drive formation setting up in TLT, which is a proxy. It's a 20-year T-bond ETF iShare. So that's also in gear, and perhaps that comes in pretty close to when the yen will be putting in some type of bottom. Wouldn't be surprised if we're starting to get, yes, we are starting to get a little divergence on the 2 hour in the yen and the 4, but I asked myself, would I be long yet? And the answer is no. Something else I'd like to teach you for people who come out of trades too soon, and I believe definitely in partial profit. So you are at times coming out of part of your position too soon. But something that has helped me, that someone once told me, because I described that, my lack of patience at times for sitting for objectives and targets. One way to do it is with a trailing stop, get some type of, some type of EA to have some of your trailing stop. The other thing to do if you're a discretionary trader is, say, for example, I'm short the yen right now. And, I've already taken partials, as you guys, if you check the videos, you'll see there are a few different levels we sold it in the last month. It's been one of my better calls, lower yields, lower yen, and now the metals are finally kicking in. Also, new lows in the dollar correction as well. So the point being, you ask yourself right here, if you're short, would I reverse here? And if the answer is no, you just walk away and you stay short. Okay, so the same thing if you're long something and you're not at your objectives, but you see there might be a little short term, give back on your position, ask yourself, would I reverse and get short? And if the answer is no, you stay long. You go manage your trade from a higher time frame, and at times walk away and not stare at your position. So you may want to write that down. It's helped me over the years. Looking at commodity currencies, they continue to grind up. Aussie, Kiwi actually stronger. So this too is part of this dollar correction. And, there's at least another day or twice as weak as today. We're down 22 in the Dixie right now, and we're 40 away from this level. So let's see, we really haven't made a new low. There will be a little divergence against this low, but I'm going to be patient and wait for that 91.40 level, or now that it stopped short of it, I'm kind of thinking we go deeper at the 61.8 level at 90.90. So 91.33, 90.90. Looking at oil, man, what a give back in oil. So, COVID may be being handled okay, and vaccination rates okay in the US and Western Europe, but Asia is still under the gun. And I think that this weakness in oil, I talked about it yesterday, there was no news on it, is most likely people shaving some GDP off the world, that especially in Asia, that are having problems, bigger problems with COVID, and perhaps that's creating a lack of demand in the oil market. You look at it on a daily basis, and it looks like this was a failing rally to me. In fact, it's a second high, and I have some 200-day moving averages coming in around 59. That's still quite a distance away. And, this is an economically sensitive commodity, unlike gold and silver, where gold's a monetary metal. Gold is about destruction, fiat, debt, while things like oil and copper, which is lower again today, is about construction and the building and economic growth. So the message you're getting here right now is more of a monetary scare and classic market behavior in the stagflation environment, where you don't have real strong growth, employment, but you have high prices. And really the question is not that we have it and whether it's transitory or not. The question is, how does the Fed react to it? So looking at S&Ps, failed to make a new high today. I'd say here's a pretty good line in the sand for you in the S&Ps. Let me draw in just this horizontal line again here. By Friday, if we close under where we are now, it's going to be a 2-week reversal under the 4409 level. This would be the second time we failed to make a new high. So we'll see what happens here. Here's 1-year lines in the sand. We start taking out these levels, then we're probably headed lower. So keep an eye on this level for your first sign of S&Ps doing something negative besides not making new highs, which everyone is pretty used to. Looking at NASDAQ, it's demonstrating a little bit more relative strength, but the NASDAQ hasn't made a new high since July 21st, which is, we've tried, it's tried, and really has been an instruction in fibs and how it's reacting to fibs. So this was 88.6, this is 78.6, here we are at 78.6 again. And you know what, even if we get another push up to new highs, we're not going to confirm on the 4-hour. Maybe we will on the 2. The daily won't. So maybe we get one more high, and this time the RSI stays under 70 into this. I really think if we're going to start and have a correction this summer, it's got to start no later than early next week. So I think that the NFP could be a very big inflection point for a lot of different markets going forward. Let's take a look at a couple of other markets. And I want to invite everyone to join us on TradeGate Hub and share their views. We had this little pullback in Bitcoin. Look at that. Drive 1, drive 2, and drive 3 before the pullback. So I'm not sure this is deep enough in Bitcoin. We'll see what happens. To me, it's no man's land. You definitely have outperformance in Ethereum's about to make new highs. So Ethereum is the preferred long. What a great buy it was down here. Gave you 2 chances down here at 1760. Ethereum looks like it may, challenge these highs up here. And why not? What kind of high is this? Yep, it's a confirmed high. So when you have a confirmed high, there is potential for it to make a new high because it did not top diverging, it topped confirming. So perhaps we're going to get that on a weekly basis. Look at this momentum. Unbelievable momentum. So to me, it looks like a potential bull flag there in Ethereum. Taking a look at the gold shares, they started to act better. There you go. Nice little divergence, double bottom in Yamana Gold, GDX, which is the ETF on it. Now kind of railing into resistance. It's going to be interesting at the gap here. We're going up, but we'll see if there's a new high in it. This doesn't look as impressive. Let's look at best of breed, and that would be Newmont. Newmont's kind of a tell, and that's kind of a weak response. We filled the gap here, so gold shares aren't really keeping up with a $20 rally in gold. So here's your daily in gold, and here's your daily in GDX. Gold's looking much better. Here's your daily in Newmont. That doesn't look good at all. So I'd rather see it the other way around, traders, where miners are leading, and that doesn't seem to be the case here. Let's keep moving down the road here. We had some big breaks in soybeans yesterday. They're trying to recover, but hanging on by a thread. I think you have some long-term buys in the grains down here, about 12 bucks in soybeans, 12 to 11 to accumulate for the next run. Now let's take a look at FANG as NASDAQ has turned positive again. A lot of people talking about new highs in Apple. Looks like it could happen. And if it does happen, we're going to have a nice daily divergence. If it does happen, we're going to have a nice 4-hour divergence if we take out this top. And just like I have a vertical horizontal line in the S&Ps, when you look at this weekly, 140 is so key in this Apple stock. And, Apple carries a lot of weight in the indexes. So back under 140 is not going to be a good signal for Apple. And this is a pretty classic 3 drive. There's one with a confirmed high, pulled back, made a new high, diverged, and kept it right around the 70 level. And this high up here, a little above the 70 level, but pretty glaring divergence that we have here. This looks like it could be a 3 drive. If you want to be conservative, you wait for Apple to take out this 140 level. There's plenty of room for it to fall once we do that. 126, and people will come to take me away if I think Apple could pull back to 74, which would be, a little bit beneath the high that we had in the COVID crash. So, looking at the COVID crash in Apple, it really wasn't much, was it? But how about a retracement back to it? I think would shake up a lot of portfolios. Tesla ended up breaking out of this descending triangle. Sometimes you get false breakouts. So we'll see. It would have to be all the way back under 1670 for that to be the case. And it actually looks pretty good to me. So it's not part of the FANGs. Amazon trying to recover from really, it looks like a broken stock to me now. I'm not saying it can't rally back to 35, but it looks pretty broken. And here's your daily, a huge gap. Is it going to rally into the gap? It could, but it may not fill it. If it's weak, it won't fill it. So maybe it's got another $100 left in it. Here's Microsoft. The last high did confirm, but I think we're about to end this throw over here. So let me get rid of this. Oh, and while I'm doing some house cleaning, I want to invite everyone to be here tomorrow for our interview with a trader friend of mine I've known for 4 years or so, Stelios Kontos, and he's an author. He wrote a book about the LIBOR scandal, and I'm sure that you history buffs, it probably seems like ancient history, but LIBOR was one of the first scandals during the Great Recession in 2008 when they were looking for, now they're going to crack down now that we had a global financial meltdown. So Stelios will be with us tomorrow morning, same time, same station. So, okay, let me just update this. So we've had a throwover. It actually looks like we're back inside of it. Yeah, so there's Microsoft back inside the throwover, and pretty good divergence on the weekly. 2 hour doesn't look like it's going to make a new high. Google is one of the stronger issues, and we're way off the highs here. Not saying it can't rally, but the point I'm trying to make is even though NASDAQ keeps grinding but not making new highs yet, where's the strength coming from? Here's Netflix. Looks pretty sick to me. Maybe people aren't staying home watching as many movies, and Facebook. And I think all the issues I showed, they're all going to have antitrust or regulatory issues to deal with. Maybe not as draconian as what happened in China recently with tech giants over there, but keep in mind that still is Democratic administration in there, and there is talk of doing something. President Biden's made comments about content. Anyway, I also interviewed Charlie Gasparino of Fox Business, and he went to that summit they all had, and they weren't in a good mood. They weren't letting the press talk to them. Apple's CEO Tim Cook has called Nancy Pelosi to tell them to please call off the dogs, but there is some risk of breakups and pressure from the government on these companies, especially the fact that they paid very little in corporate taxes over the last years. They became gazillionaires. And here's a quick look at the Dow. The Dow, kind of stalling up here, trying to fight its way back, but everyone's waiting for a breakout in the Dow. Some people are talking 35.7. I say, well, maybe. Right now, the Dow looks like one of the weakest. And here's just a rundown. We'll wrap it with the Russell. So the Russell has driven traders absolutely crazy with, false breakouts to the upside, then a failure, then another breakout, and then a breakdown and a breakdown failure, and now some type of rally. Everything's still making new highs without the Russell. Again, we take out this low with these moving averages here at 210. That's going to make Russell pretty vulnerable. So that's a wrap for me. Any questions on anything I've covered here today? Again, gold is on fire. 1860 looks viable coming out of that triangle, that rectangle that I drew right here. And, here's an 1874 fib looking good, silver looking good, yen getting closer, but not there yet. And the dollar, looking for it to push down towards this 90.90 level, 91.30 to 90.90. Maybe it does it into the employment number, NFP, or next week. So weak dollar on ADP feeding into this dollar weakness. And remember, everyone, our mission here at TradeGate Hub is to build up and edify traders every day. If you're either new or advanced, come in and let's support each other and share ideas, because each one of you, just like me, only have two eyes. And I'm a big believer in community and social trading, and having a mastermind group is my goal here in TradeGate Hub, of attracting some of the best traders on the globe to come in here and share great content and actionable ideas for people to come and learn and develop as a trader. So good hunting the rest of the day, everyone. Thanks for your attention. Adios.